Thinking of retiring in another country? I don't blame you. There are tons of very attractive reasons to do exactly that. But what happens to your...
If your income is just a few dollars too high, you could lose over $10,000 a year in government pension payments. Yes, even $1 over the limit triggers the OAS clawback in 2025. But with the right strategy, you can legally keep every dollar you're entitled to. If you're 65 or older or helping someone who is, this video will break down old age security and the guaranteed income supplement for 2025. What is OAS? Old Age Security, or OAS, is a monthly payment from the Government of Canada to seniors aged 65 and up. You don't need to work to qualify. This benefit is based on your age, your residency in Canada, and your annual income. In 2025, if you're between 65 and 74, the maximum monthly OAS payment is $728. If you're 75 or older, you could receive up to $800 per month. Now here's where it gets tricky. Your income matters. If you earn too much, you'll have to pay part or even all of it back through something called the OAS clawback. What is the OAS clawback? The OAS clawback is a penalty on your old age security pension if your net income exceeds a set limit. For the 2027 payment period, based on 2025 income, your clawback starts once you earn more than $93,454. Let's break this down with an example. If you earned $110,000 in 2025, that's $16,546 above the threshold. The recovery tax is 15% of that extra amount. So 15% of $16,546 equals $2,481.90. You'd repay that amount spread out in monthly deductions from your OAS payments between July 2026 and June 2027. Here's the full repayment breakdown for 2025 income. If you're 65 to 74, your entire OAS will be clawed back once your income exceeds $151,668. If you're 75 or older, the full clawback takes effect at $157,490. That means once your net income crosses those upper limits, you won't receive any OAS payments for that 12-month period. What's new in 2025? Here are the latest payment rates and clawback thresholds you need to know. OAS payments. Ages 65 to 74, up to $728 per month. Ages 75 and over, up to $800 a month. Clawback starts at $93,454 net income affects July 2025 through June 2026 payments. Full clawback thresholds. Ages 65 to 74, income above $148,605. Ages 75 and over, income above $153,771. All this is based on official data from the Government of Canada. What is GIS? The Guaranteed Income Supplement is an extra monthly payment for low-income seniors who already receive OAS. It's tax-free, and you don't need to apply separately. It's included when you apply for OAS. But you only qualify if your total income is below a certain limit. In 2025, a single senior can receive up to $1,716 per month total from OAS and GIS combined. That includes $800 OAS, $916 GIS. For singles, GIS starts to reduce if your income is above $21,624 per year. If you have a spouse or partner, the income threshold is higher, depending on their income and whether they receive OAS. How GIS works. Let's say your total income in 2024 was $18,000. That includes a small workplace pension and some RRIF withdrawals. Based on that, you'd qualify for the full GIS top-up in 2025. But let's say you withdraw just $5,000 more from your RRIF in the same year, pushing your income to $23,000. That could wipe out your GIS entirely for the following year. Why? Because GIS is income tested, and it drops sharply once you go over the limit. So if GIS is important to your budget, you need to carefully plan your withdrawals from pensions, RRIFs, and other sources. avoiding the OAS clawback. Here's where strategy really matters. If your income is hovering near that $93,454 threshold, a few smart moves can save you thousands. 1. Use a TFSA instead of an RRSP or RRIF. Withdrawals from a tax-free savings account don't count toward your income. That means they don't trigger the OAS clawback or affect GIS. 2. Split pension income with your spouse. If one partner earns more, splitting pension income can lower each person's taxable income. This helps both of you stay under clawback limits. 3. Delay OAS or CPP. You don't have to start your OAS at 65. If you delay until 70, your monthly payment increases by 0.6% per month, up to 36% more. Same goes for CPP, which increases by 0.7% per month if delayed. 4. Withdraw RRSPs early. If you're retired but not yet 65, consider drawing from your RRSP or RRIF early, before you're eligible for OAS or GIS. That way, you reduce your taxable income later when those programs kick in. 5. Control trust and investment income. If your family has set up a discretionary trust, be mindful. Any distributions to you count as income. That can push you over the threshold and reduce your OAS or GIS. Timing and structuring these payments is crucial. Important forms and deadlines. To avoid mistakes or interruptions in your benefits, keep these timelines in mind. Each January, you'll receive an OAS Return of Income form. You must submit it by April 30th each year. Your income from the previous year determines your OAS GIS from July this year to June next year. And if you live outside Canada or experience financial hardship due to the clawback, the CRA allows you to request a review of your situation. Also remember, the total of your OAS clawback plus non-resident taxes cannot exceed your total OAS payment. Extra tip: RRIF withdrawal. Tax rates. If you have a RRIF, the minimum required withdrawal doesn't have withholding tax. But if you take more than the minimum, your financial institution must withhold tax. 10% on withdrawals up to $5,000, 20% on amounts between $5,000 to $15,000, 30% on anything over $15,000. In Quebec, those rates are slightly higher due to provincial tax. So if you need a large withdrawal, consider spreading it over the year or withdrawing just above the minimum and handling tax when you file. Recap: maximize your benefits, minimize the clawback. To quickly recap, OAS maxes out at $800 per month in 2025. Clawback starts if your income is over $93,454. Full repayment begins over $148,605 or $157,490. GIS is tax-free but reduced sharply if income goes above $21,624. Smart planning like using TFSAs, delaying pensions, and splitting income can help you avoid the OAS clawback in 2025. If you found this guide helpful, give it a like and hit subscribe for more practical retirement tips and Canadian finance updates.